Something big is happening with gold and silver. We're not just talking about prices going up, we're talking about records being absolutely shattered. So in this explainer, we're going to dig into what's behind this incredible surge and what it might mean for all of us.
I mean, just look at silver. Its price has exploded this year. We're talking 128%. A jump like that isn't just a market trend. It's a financial shockwave.
And gold? Well, it's not sitting on the sidelines, that's for sure. The classic store of value is up nearly 70% this year, just smashing through old records. What we're seeing is a truly historic shift in the market.
Okay, so what in the world is going on here? What's fueling this fire? Is this just a temporary spike, or are we watching a fundamental change in how the global economy works? Let's break down the key reasons for this massive rally.
All right, first up, let's just take a moment to appreciate the numbers themselves, because they are pretty spectacular. So here it is, side by side. Gold soared to a new record of over $4,400 an ounce. That's a 70% gain. But silver? Whoa, it's on another level. It's rocketed up 128% to almost $69 an ounce. Now, silver often follows gold, but these numbers show it's doing so with some serious leverage. Its price swings are just way more dramatic.
So the first big driver behind this is a classic move we see in markets, the flight to safety. When things get choppy and uncertain, investors look for a safe harbor. And for, centuries, that's been gold and silver. And this whole idea centers on a crucial concept, the safe haven asset. So what is that? Well, think of it like this. It's an investment people run to when things get chaotic because it's expected to hold its value or even go up while other things, like stocks, are going down.
And this isn't just some textbook theory. This is what investors are actually doing. Especially towards the end of the year, people look at their portfolios and rebalance. With so much speculation about what next year holds, a lot of them are playing defense, and that means buying up precious metals.
But it's not just about general market jitters. There's a deeper, more fundamental reason at play here. It has to do with government debt and gold's big comeback as a shield against deficits.
And this is a truly global issue. You look across the board, the US, the UK, Europe, Japan, China, and you see governments with massive spending deficits. Investors are looking at this growing mountain of debt and getting, pretty nervous about the long-term value of currencies like the dollar.
This is exactly what Matthew McLennan over at First Eagle Investments is talking about. He says the value of gold as a monetary potential hedge has reemerged. To put it simply, when governments print more and more money to pay their bills, every dollar or pound or yen is at risk of becoming worth less. So investors are turning to gold as a kind of insurance policy against that.
Now, a rally this huge never happens in a bubble. This massive surge in gold and silver is sending some pretty powerful ripples across other parts of the market.
You've heard the saying, a rising tide lifts all boats, right? Well, that's pretty much exactly what's happening in the financial seas right now. The boom in the metals themselves is boosting the companies that actually pull them out of the ground.
And you can see this in action, clear as day, when you look at the stock market. Take this key ETF that tracks gold mining companies. It jumped nearly 2.7%. The logic here is really simple. When gold is worth more, the business of mining it becomes a whole lot more profitable.
So, with prices at all-time highs, we get to the big question. Where do we go from here? Well, experts are keeping a close eye on a few key things that could tell us where gold and silver are headed. There are basically three major factors to watch. First, the long-term fiscal credibility of the United States. Can the government get its debt under control? Second, who gets nominated to be the next chair of the Federal Reserve? That's a huge signal for future money policy. And finally, wage inflation. These three things are going to be critical for what happens next. And all of this, the debt, the uncertainty, the record prices, it all leads to one final powerful question. In an era that seems to be defined by soaring government debt, are we watching gold reclaim its ancient role, not just as a safe asset, but as the ultimate measure of value itself?